Hey everybody, this is Jose. How are you, everyone? We're about to start in 40 seconds. This is a sound check. Please go ahead and type a quick hello in the chat box. That would do just for me to know that you hear my voice and sound is good. So we are ready to start. So, sound check, please, so we can start on time. Thank you very much. Very nice. Wonderful. Thank you for your confirmations, everybody. So we are 1 second away from the starting time. Here we go. We just got to the starting time. So it is now time to start. Here is the introduction slide, fully maximized so we can have a proper official launch of the session. So let me say hello to everybody. Official welcome to the session. Today is 7 of April 2020. My name is Jose Blasco. I will be your guide. And today, the idea is to go over short-term market opportunities. So we're getting together to do a little bit of intraday trading, and we'll be using different assets such as futures and Forex, and looking at commodities, indexes, currencies, all sorts of things. And whenever a market is providing an opportunity that matches our rules, then we'll just take the trade. And if they don't match our rules, we'll keep looking for opportunities in an impeccably disciplined and professional manner or professional approach to we understand how trading should be. Okay. I'm looking at everybody here with us. Nitesh, good to see you. Leland, very nice. Dirk, how are you? Paul, Osman, Ray, nice to see you all, everybody. So let's begin the session. Okay, and by the way, I had a little bit of a problem with the volume of my microphone the other day. So I know you confirmed that you hear me, but my next question as we begin is, do you hear me well? Is it too loud? Is it okay? Please give me a little feedback in that sense as well while I read the disclaimer. So, disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. Here we go. Session is now officially introduced, and therefore we are now jumping into TradeStation, ready to identify opportunities and plan them. Okay, sound fine to you? It's clear and good. Wonderful. Perfect. Okay, so let's begin. Okay, let's begin. So what do we have? Well, we have the red screens. Okay, on the left we have futures markets. In the middle we have the majors. On the right we have the minors. Okay, and going from left to right, we go from centralized markets to decentralized markets. Okay, so Forex on the right is decentralized, futures on the left is centralized. And because it's centralized, it allows us to go deeper into the timeframes, given the fact that we can be more precise. So we start with the 15-minute time frame as a climate for the most liquid futures market, which is crude oil, the euro contract, the S&P, gold, and the Nasdaq. Then we go a little higher, 60 minutes for the yen futures and natural gas, and then 4-hour time frame for the lean hogs. And then in the middle is all majors. They are all quite liquid, but notice how we start with the 60. We don't drop all the way to 15. I mean, if you have an impeccable Forex broker, you could go ahead and do that. But again, out of safety and precaution, we start with the 60, 240 and daily for the majors. And then on the right, now we are dealing with the minors. There is less liquidity and decentralized markets. So now our starting point is 4-hour time frame going straight into the daily time frame. And this is how we have our screening tables set up, okay, with the red screen with TradeStation. Okay, so what are we doing here? Okay, so what we're doing is let me what I'm looking for is here, format the page. I just want to get the sorting fixed for the condition. So where are you, condition? Here we go. So condition, and this is going to be sorting every 60 seconds. Great. So when I sort by condition, it's going to put me the golden boxes on the top, okay, which is what I'm looking for. So I'm looking for golden, but also apart from golden, which means that we have a potential opportunity right there, near and sensible. So that's good. But I also need to double check that my climates are confirmed, and the gray color means they're not, okay? So that's almost good, but not good yet. We'll see in 15 minutes from now what's going to happen. Similar happens with the yen. What a coincidence. We have near sensible, but also the climate is gray color, meaning not confirmed. Okay, so we're going to pass on the futures opportunities, at least for now. And any other opportunity may flash any minute. Okay, I can see crude oil is 0.6 away from the average. So crude oil may flash in just a sec. And if that's the case, we'll go back to take a look at crude oil. Okay. Okay. In the meantime, currencies. Okay. So what do we have here with the currencies? I'm gonna right click. Same thing. I want to sort my settings for the page, so I get my sorting set up where the condition is. Where's the condition? Here. And I want to sort it every 60 seconds, as you can see automatically. 1, 2, 3. Here we go. So we do have, with the Great British Pound, an opportunity near sensible with a confirmed climate. Notice how we don't have gray in this case, we have red color. So the climate is confirmed and is near sensible. The one below is also near sensible, but the climate is gray color. So we're going to pass on the QE. Okay. And the first trade that we're going to attempt to plan is going to be the GBP USD spot Forex. To do that, I'm just going to bring into the main screen a trading view and switch the symbol to GBP USD. If you're attending the sessions for a while, you probably know, because I said it a few times, that the way I have this trading view set up is basically for me to perform 3 trading styles. On the left, I'm dealing with the 60 and the 8. In the middle, I'm dealing with the 240 and the 21. On the right, I'm dealing with the daily and the 55. That's how I'm looking at this. So since the opportunity with the pound was showing up here a second ago on the 60 minute, okay? So what I'm gonna do is, when looking at trading view, I'm only gonna be looking at 60 minutes, okay? And 8 minutes. In other words, I ignore everything on the right and I focus only on what's on the left. Okay, so let's do this. Now, when doing that, okay, the first thing I'm going to do, which I kind of know it thanks to the radar screen, but also decentralized markets such as Forex sometimes will provide a little bit different data between brokers. Okay, so I know already my climate is valid for me to take a trade to the short side. It was red, isn't it? But you know, it's always good to come here and double check. And yes, it is. It is a thick dot, red color. So we got one candle into the climate. Statistically, this climate, if the climate begins progressing, which it should happen based on stats, okay, and we'll look deeper into the chart analysis to understand better if it's going to happen or not, or it's likely to happen or not. But basically, if it's going to happen, this climate is likely going to last 6 candles on the way down, which is a 6-hour trade. Okay, so this is candle number 1. This is the beginning, and therefore it's a very good starting point for us to catch a nice trade. Okay, so the average price, which is the price at which we would like to trade in a perfect world. So we want to trade around that price, because you know it would be too easy to say that's the price. Okay, so we want to trade around that price, which is the average price, but we want on-field orders to be available at that price. So notice how I am turning on AutoUFOs, okay? And AutoUFOs is going to tell us where are the on-field orders, okay? And unfortunately, on-field orders to sell are not available at that price point. They are available way higher at 124 something, which is all the way here, okay? So not at the average price. So before I give up on this trade, I'm going to switch to the 21, not the 21, sorry, the 8 range time frame. Okay, and with the 8 range time frame, I am curious to see where my on-field orders are going to be. Okay, and it seems that I got on-field orders at 123.30. Okay, 123.30. The current value, symbol last value label. So the current value is 123.27. Okay. 27 is already above 24, which is the EMA. So that's not really good. And on top of that, the UFO, it is certainly close, but certainly not enveloping the EMA, which is our rule. In other words, looking good, but not good enough for us to say yes to the trade. Having said that, it's something that we will keep monitoring, utilizing the red screen with TradeStation, because anytime, it could take very little amount of time, really. A new UFO may form here at the right price point, and next thing you know, we don't have a trade now, but during the 1 hour it's going to take for the climate to continue defining itself. Certainly multiple UFOs could form, and if they line up with the EMA, now next thing you know, you have a trade. Okay, but at this moment in time, as we speak, as we are looking at the trade together, the trade is not valid because of that reason. Okay, so what else? Again, quick look at the futures. So we have the same thing, near sensible long, but it's still unconfirmed. So nothing new on the future side. On the 60-minute majors, nothing new either, because the one that we have here on the top is the Kiwi that earlier we said we were going to ignore. So nothing there. But now notice how on the 4-hour time frame, we do have two opportunities with the pound and the yen, which are confirmed climates, okay, and they are both near and sensible. Okay, so we do have possible opportunities there to be double checked with the chart. The chart, it's in the end, is our master, if you wish. The chart will confirm if the trade is valid or not. So we always need to go back to the charts, okay? But it's looking good as of now, okay? So we're gonna start with a 4-hour time frame for the pound, since I'm already here with the pound. So we're gonna start looking at the 4-hour time frames, and then we'll check the 21 to see if the trade setup is valid or not. So zooming in, what do we have? We have a defined climate to the upside. We knew that because of the red screen, but again, we always need to double check. So thick dot, blue color, up climate. Statistics suggest this up climate is going to last by 6 candles. So therefore, that could potentially be a 6 hour. Sorry, let me rephrase that. 6 times 4, okay? Because every candle is 4 hours. So 6 times 4 hours. That's a nice trade. But careful here, because we've already been 3 candles into the climate. So basically it would be 3 candles of 4 hours each. So it's kind of like we're expecting to catch a 12-hour trade here, something like that. 3 times 4 is 12, isn't it? So good time for us to take a trade. And therefore, we're going to follow the same process we did before. Our reference point is 123.05. This is our reference point for us to take a trade in the direction of the climate. Of course, we don't want to do it just because there is an average, even though, at times it could work, but really it will not be a very, very high probability approach. So instead, we want to turn on AutoUFOs, like I just did, to find out where the on-field orders are. And at the moment, it's showing here on-field orders at 22.66, which is somewhere clearly below the EMA, like 40 pips below the EMA. So that UFO is really not helping. Therefore, we're going to switch that 21-minute time frame. We're going to give it another opportunity, and we are going to switch to the 21 range time frame to see if with the range time frame we do have a proper confluence. Okay, and at this moment in time, so we have I would say almost, okay, we got 24 and we got 11, okay, so 06 is close to 11, okay, but certainly it's below 09, so 06 is more or less here. So again, we have a case where we do have a proper climate, but the EMA unfortunately is not being enveloped by on-field orders. So we are just relying with a possibility of an EMA to add on-field orders instead of relying on something which common sense suggests would be stronger, which is on-field orders already available in the market, plus the EMA that may add more. So now you got 2 forces working your way, but in this case, we don't have that. So we pass, and therefore, we're going to now go ahead and look for the next symbol. That was the yen. You probably remember we said the pound and the yen. So we're going to look at the yen and see what happens, okay? Quick look at the chat box before I start with the yen. Let me see. How are you, Ahmad? Good to see you. Javier, Ray, nice to see you. Wasiu, I really love your app software, but I need to practice with it to know how to read it and use it. Yes. And by the way, quick, thank you. I should say, first of all, that's very kind of you, Wasiu. But also, when it comes to practice, okay, I want to make sure all of you are aware of the replay functionality with TradingView. This is very powerful, okay, because you can come into this chart, click replay, go back in time. Okay, the moment you click there, it rewinds the chart, and then you can do your analysis, your planning, your auto climate will work, your auto UFO will work. Okay, and then here you have your play bar, okay, where you can vary the speed of the replay. You can make it slower or less slow. Okay, I'm gonna keep it fast. Okay, so that way, you know, I don't spend much time with this and I go back to trading. But basically, when you click play, you know, the chart will start replaying, so you can play and pause, and document your trade, do backtest, and basically practice at a higher pace compared to the pace at which the market moves, which it's a very good thing. It's very powerful for traders, okay, to develop your skill, to understand your methodology, develop your confidence, and much more, okay? So just in case you were not aware of that, this is there with TradingView, okay? Cool, okay. So we said the yen, okay? So we have the pound and the yen, and I'm looking at futures as well. Let me see, we just have an update. You know, we just have a few flashing alerts here because the clock is now ticking 15, meaning that we got new closes on the 15-minute time frame and potentially new climates. But notice, oh my God, look at this. There is a little bit of indecision at this moment in time in the market where all the climates are not confirmed. Okay, so even though we do have golden alerts, as of now, nothing to be done. So we just wait. Okay. Well, actually, Linhox is giving us an alert here. Okay. So as I complete the trade with the Japanese yen, the next one I'm gonna check is the Linhox, which just gave us. Well, actually, I won't, because it's hopeful, meaning that this market has already been moving 16 candles in a direction where statistics suggest it should be 7. So this is an overstretched market, and something crazy could remain crazy. We know that, but when you enter a market and it's already kind of late, then your probability is much less. And because we have so many more opportunities to trade, so there is no need to force it. Okay, so my bad when I say we're going to look at Linhox, we will not, because it's a hopeful opportunity instead of a sensible opportunity. Okay, so back to the yen. So what do we have with the yen? Okay, so zooming in. So on the yen, we have a blue and thick dot. The climate is confirmed. We've been traveling 2 candles into the climate, and this climate should be of 6 candles. So if that's the case and we get 6 candles going up, actually we already got 2, so let's say we got 4 more candles going up, 4 times 4, well, that's a pretty nice trade, isn't it? That's a 16-hour trade, so that is not bad. So let's see if we're gonna find, let me turn on AutoUFOs on the 21-minute time frame, because we're gonna be looking for UFOs using the reference price of 108.90. Okay, so 108.90, not a good news with the yen, because we do have on-field orders, but they are located at 67. Okay, so 67 is somewhere here, which is certainly 30 pips or something like that below 91. Okay, well, it's less than that, but it's okay. So it's below 91. That's the point, right? So we don't have that UFO enveloping the EMA, and therefore we don't have the power we're looking for. So I'm going to switch to the 21 range time frame to see if in the range time frame we do have that. Okay, so on the range time frame, we got a 108.76, which is better than 67, but is still below 91. Okay, so look, it looks like both the pound and the yen are a little bit of teasing us today. Okay, I mean, we know the job of a trader is to say no more often than yes, isn't it? Our job should be to discard more often compared to the trades that we plan, because this is how we produce quality on our trades. If you take every trade you identify in the market, that probably means that you are just taking anything that looks like a trade, and probably they are low quality opportunities. Okay, so our job is to be selective. Okay, and therefore we need to discard a lot before we say yes. Okay, so all good. Was you thanks, brother. I will continue to watch the replays at my pace and get confident with the app. Wonderful, wonderful. Way to go, Ahmad. EC is dropping from 240 SZ. Let's wait to show in auto climate. So I mean, if the EC, which we have here, is dropping, okay, a little bit later we may have a confirmation on the climate. We don't have it yet, okay, but to be honest, for me to short it, I need it to go back up. So if it keeps falling I mean, it's nice to see, but we are not going to be able to enter the trade because we need price to go back towards the EMA, in a place where UFOs are available too, to have a high probability trade and also have a proper place on where to set our stops. Okay. Okay. Let me see. Javier, please, because I am new and I don't have data in my trading view, would that be your suggestion on which time frame to serve the Nasdaq, for example, to have a clear idea where the market would go? Well, Javier, this is a very generic question, the one you just asked, because for me to be able to answer your question, you would need to tell me what type of trader are you. If you are using delay data on your chart, but you want to trade intraday, which is what we're doing today, then I would just go ahead and say, just don't do it. Just don't do it, because for you to trade intraday, you need precision. And if you got 10-minute delay, you are, blind for 10 minutes, and therefore you cannot be precise. So don't do it. Now, you tell me that you're an investor and you want to look at the Nasdaq, so then you can look at the daily time frames, the weekly time frames, and there, 10-minute delay is not a big deal. But certainly, if you're doing intraday trading, you should use real-time data, because if not, you have a big problem there. Okay, just know. Again, I'm diverting here a little bit, but it's important for you to not to get in trouble. So I need to divert here just a little bit. So everybody, listen carefully. This is important stuff. Okay. So first, I'm looking at our YouTube channel that you all know. There is a sharpening session here, sharpening playlist, I should say. So if I click on the playlist, notice that here there is TradingView tips and TradeStation tips. Okay, so take a look at this. Okay, please go ahead and take a look at this, because under TradingView tips, this video will teach you how to connect brokers to TradingView to get free data feeds. Okay, for example, TradeStation is a broker that gives you access to free real-time data feeds. Okay, data feeds, when they come from an exchange such as the Nasdaq, okay, which, to be honest, the Nasdaq futures doesn't come from the Nasdaq. It comes from the CME, the Chicago Mercantile Exchange, but it's still an exchange. So when the data come from an exchange, exchanges charge, okay? And having real-time data feed is impossible unless your broker is kind of subsidizing it, okay? So it's either you use a broker that does that and you plug it into TradingView, so watch the tip on how to do that, or you have to subscribe to it in TradingView. So you go for TradingView, click on the pricing, okay, scroll down all the way to the bottom, and here you can see you can subscribe to real-time markets, okay? And those markets are going to be the ones that are centralized. For example, if you want to trade the Nasdaq futures trades in the CME, okay, in the CME, CME Globex, okay? So this could be the package that you get, because if not, you get 10-minute delay. Okay, so if you don't want the delay, you will need to get into a $45 per month type of subscription, which is basically what the CME charges TradingView to pass you on that real-time data. Okay, and this is how this works. So again, it's either you do it this way, or you have a broker that allows you to connect. So okay, so you click here on trading, you go to see the brokers list, okay? So you basically log out, okay? You pick your broker, okay? You pick your broker, okay, yeah, I know why this is happening. There are more brokers than that, but given the IP address I'm using right now, it's only showing me a few. Let me see the list of brokers. Yeah, so again, I'm using an IP address that does not allow me to see US brokers at the moment. Okay, so that's why. But if I use a different IP address here, you're gonna see so many more brokers, and then you just pick the one you need, and then you just connect, and now you got real-time data on your charts. Okay, so again, I diverted here. I need to go back to trading, guys, and keep going with the session. But keep all of this in mind, and if you need to trade intraday, you need the proper tools. Okay. This is the bottom line, if you wish. Nitesh, Jose, AutoClimate scanner available on TradingView. I'm guessing that you are referring to this screen. Okay, so this is called the radar screen, and this is a native tool that is proprietary of TradeStation. In other words, this is not available on TradingView. TradingView has a lot of features, including the market replay, which TradeStation doesn't have. But also vice versa, TradeStation has things such as the radar screen, which trading view does not have. Okay, so trading view, red screen is just to save you time. It's pretty handy. It's not super needed. Certainly, I do use it in the sessions because it saves time, and hopefully we can find more trades together at the same time. Bojan, how are you, my friend? Good to see you. Paul, Jose, I wanted to say a big thanks. I trade Forex and was losing consistently. I've been using AutoUFOs since March 1st and made over 1,000 pips in March. April, not quite so good. You are minus 260, but early days. Wonderful, Paul. Way to go, my friend, and I'm very happy to see that progress and this change of trend in your own results. Okay, and keep up the good work. Make sure you keep attending the sessions. Also on the 14th, which is on Sunday, we're gonna be doing a get together sharpening session. So everybody join me. Come with your questions. We can review trades. We can do many things and sharpen the skills. Okay, but guys, I need to go back to the charts. Okay, because today is a trading day. Okay. Anyway, so let's continue. Futures, still all the same. In 5 minutes from now, we're going to have an update. So hopefully certain climates will define, but not at the moment. So what else do we have? Daily time frame for the euro. Okay, so we got daily confirm. Everything else is unconfirmed. So daily down climate. So let's take a look at the euro US dollar daily time frame. So what do we have? Okay, so let's zoom in. So we have a confirmed climate, 4 candles out of 6. Okay, so when price gets there, which basically price is meeting up what could be a good entry, these may keep going down for 2 more candles, which is the difference between 2 and 6, or sorry, 4 and 6 is 2. So we may have a 2-day trade here, sometimes even much more. Okay, but at least a 2-day trade, and let's see if the setup does validate the trade. So I turn on AutoUFOs on top, as you just see me do. We are looking at the average price being 108.96. 108.96 is more or less at current price. We don't have UFOs at the current price, unfortunately, with the 55-minute time frame. But what about the 55 range time frames? Maybe we do. Let's see. So we have UFOs there at 109.01. 109.01, and the current price is 108.86. The EMA is 96. Okay, so for sure, if this goes back up towards 96, the EMA will move up. Okay, from 96 to, I would say, probably just below 01, but it should be very close to 1 because basically we're talking about 5 pips. Okay, so if this goes up by 10 pips, the EMA may go up by 2-3 pips, something like that. So it should be right below. Okay. Now, given the fact I'm using range timeframes that produce UFOs which are very narrow, this is only 10 pips. Okay, between 01 to 11, and a 10 pip UFO when you are trying to catch a trade on a daily climate. For the ones of you that have been practicing for a while, this is a tiny UFO. So I'm gonna be okay with adding a little bit of wiggle room. Above, we know we do it for the stop. Below, I'm okay to add a little bit of wiggle room, and the reason why is because it's a range time frame. If it was a time-based time frame, I would not do this, but because it's a range time frame, then I will open the door to do such action. Okay, so I'm gonna enter the trade. I'm gonna estimate that the EMA is gonna go up by 2-3 pips, so it's 97. I'm gonna make it 0-0. So I'm gonna place an order to enter at 109.00. Okay, let me type it. Okay, so we are going to go ahead and enter short the euro at 109.00. Okay, we're gonna do this. Then for the stop loss, okay, we're gonna go above 11. Okay, but remember, when I do my 109.11.1, I need first to have a little bit of a rounding effect to the 4 decimal place. And because this is going to be a buy stop, it's going to be rounding up, so it's going to be 12. Okay, and now that I rounded to 12, because it's a buy order, I need to add 2. That's going to be 14. And now because it's a stop, I need to add 5, so it's going to be 19. Okay, so basically my entry is going to be 109.00. My stop is going to be 109.19. So we are dealing with that 19 pip stop trade. okay, which is very small risk given the fact that we are dealing with a daily climate, especially in the recent times. On top of that, the volatility on the euro has been exciting. So I'm turning on auto UFOs, looking for the target on the daily time frame. Okay, and wow, we have nothing there. Okay, we have nothing there. So I guess I need to load a lot of market data. Let's see what happens. Market data, market data, market data. Yeah, so everything below price, it's understood based on the technology that the app processes. It's understood as low quality. Okay, it's understood as low quality, and because it's understood as low quality, it's not plotted, and that opens the door for an infinite profit type of trade, which is great to see on the chart. But let's be realistic: there's no way that's going to happen. Okay, and we talked about that many times. Okay, so normally when you have a trade like that, you would end up trailing stop, trailing stop, trailing stop, and then basically collecting your profit, somewhere down, but we don't ever know where. Okay, so especially because this is a trade where we are planning it on a daily time frame, and let's say the trade has not concluded at the end of the week, and let's say you close over the weekend, and on Sunday the market reopen Sunday evening in California time, for example, or Monday morning New Zealand time, for example, or wherever you are in the world, when the market reopens after the weekend close. So maybe you have a gap, right? And if you have a gap and you have a strong gap in your way, you may want to have an order to close the trade for a profit, because after a strong gap you may have a strong reversal. Okay, so in this sense, especially when dealing with longer term time frames, I don't want to just have the trade with no target and just trail stop. I need to find a target. So I'm going to move to the weekly time frame, okay, and see where my target could be. And I got there a UFO at 106,777. Okay, that's gonna be my target. Okay, and by the way, that's far away. That's 11 to 1, isn't it? So that's a fantastic target. Okay, but at least now I have a value that makes sense for me to use. Okay, and of course I need to do some rounding. So 77 becomes 78. Okay, and of course, because it's a buy order, I need to add 2. So 78 will become 80. Okay, so in other words, we are shooting for a trade where I'm risking 19 pips in order to collect 220. I'm very happy about the very small risk. I am very happy but very skeptical about the fact that the trade produces 11 to 1, 220 pips for only 19 pips of profit. This is one of those trades that look to be too good to be true. And you know what? That's what the chart tells us. So we're just gonna follow the rules. We're not gonna improvise, but at the same time, we gotta be realistic with our expectation, because I don't want you guys to be next thing you know, you become very greedy about this trade, and next thing you know, you suddenly decide to go with 3 times the size of the risk you normally execute, just because you feel this is the trade of your life. Okay, and this will not be the case. By the way, I'm going to change this trade. I'm going to feel better, by the way, by changing the trade. We just have a new UFO that just formed at 92. Okay, so I'm going to make the entry 8 pips below 892. Here we go. That's going to make the risk of the trade to be greater. Okay, I'm not sure why the stop loss is not updating. Should update, isn't it? Okay. I am not sure why the stop loss is not updating. From 10892 to 11, I have more than 90 pips of risk, isn't it? Okay, just in case I got confused with the math in my head, let me do the math. I don't want to make a mistake because this implies adding risk. Okay, so this is how I do it for myself. If I ever get confused with the math, I don't try to redo it in my head. I just use a calculator, because if I redo it in my head, what's likely going to happen is that I'm going to redo it in my head the same way I did the first time, and then make a mistake. So yeah, it's 19 pips. It's 19 pips. Oh, okay. So 11 should be 19, right? So we said it was going to be 12, then it was going to be 14, and then it's going to be 19. Yeah, correct. So yeah, so I don't know. Oh yeah, I know why. So anyway, so 27 pips, that's the risk now. That's an 8 to 1. It's still a fantastic trade, but I'm much more comfortable with a trade of this sort, where there is much more wiggle room for everything to happen in a way that is more proportionate to the profits I'm gonna take. Okay. Now, last step here before I execute the trade. is to define my risk. To keep it simple, I'm going to use $100 of risk. I'm going to pretend that all of you have a $10,000 account and you want to raise 1%. And 1% of 10,000 is 100. So let's say that's you. I'm going to go with 100. It could be anything else. Okay, it could be anything else. You may trade an account with 1,000. You may trade an account with 1,000,000. You may risk 1%. You may risk 0.5%. You may risk 2%. You may risk 0.25%. So everybody's different, but I'm going to assume that your risk is 100, is round number, so it makes it easy for everybody. So the plan of the trade would be as follow. Okay, first, we have a stop loss on the very top. Okay, the stop loss is 109.19. That's the stop loss. Below, we have a short entry. Okay, the short entry is 108.92. Same equal distance, which I haven't typed yet, we're going to have a safety target. Safety target is going to be below 92 by 27 pips. Okay, below 92 by 27 pips. So that's going to be 65, 108.65 if I did the math correctly. And then finally, we're going to have a final target all the way below at 106.72. Okay, 106.72. Okay, so let's enter the trade. Okay, and for me to enter this trade, of course, I do need to also input my safety target at 65 and then my final target at 72. The entry and the stop are going to be the same, but for half of my trade, I'm going to use a safety target. For the other half of my trade, I'm going to use a final target. So what I'm going to do to keep it simple, I'm going to change 100 and make it 50 and take the trade twice by changing my take profit. Okay, so let's do it. So I said I'm going to use 50. I said I'm going to use 108.65. This is my safety target. So with half of the size, okay, I'm going to make this 18,000, sorry. Okay, that's 18 micro lots. I'm going to go with the order. Here we go. And then I'm going to do it again. 92. Stop is 19. And now 106.72. That's the final target with 18 micro lots again, as you can see. So 1, 2, 3, here we go. Okay. So what do I have now? Okay. Well, I got two orders with 18,000 each, two stop losses. Okay. Let me maximize this so you will see it better probably on the daily time frame. Okay. So I got the red line. That's where I'm going to enter. Let me maximize this. So the red line, that's where I'm going to enter with 2 times 18. This is my stop with 2 times 18. This is my safety target. Same equal distance from here to here and here to here. And that I'm going to get out with half of the position, which is not 2 times 18. It's going to be 1 time 18. And the other 1 time 18 is going to be my final target all the way down here. Okay. So this is the trade. And we may get filled anytime because price is really, really close. Okay. So we may get filled probably during the session here together. Yeah, actually we've got filled already. So we are in the trade. The trade is currently performing, as you can see, with an initial tiny negative P&L of 2.52, 2.88, negative sign, red color. Okay, that means that price is coming up. So, we'll now let the climate, the UFOs, the EMA, and everything else, we'll let it do its magic. Okay, and in the meantime, we will go back to look for other trades. Okay. So my friends, as we continue the session, if you guys are executing this trade with me, if you or even if you are not, I would love to get a little bit of confirmation where you tell me that you got it, you followed the plan, you understand what I've done. If you have any question, this is a good time to type as well. And if you have executed the trade, I would love to know too. So I know you are with me. Of course, you decide your size. You decide if it's real money, paper money. You may take the trade just to practice. You may take the trade, because you are more advanced and you understand it's a good opportunity and you are in with real capital. All of those things, it's fine. Everybody will have a different reason. But again, I just want to track a little bit what we are doing here as a group. Teamwork. Okay. So Ahmad, should we do the same with the euro contract? Well, you could. Okay, you could, but at the same time, the price points would be different, and of course, you have a little bit of either backwardation or contango on the futures contracts. Okay, and also you also have 1 hour close every day. So again, the trade would be very similar, but maybe not exactly the same. Okay, so make sure that you have that under control when you do it. Okay. Nitesh, with you, Jose, but not able to take the trade. Okay, it's okay. Not a big deal. You know, as long as you understand the rationale, you can practice it. Okay, and then it's fine. Okay. So once you got filled with you, wonderful, perfect. Okay, good. So let's continue. What else do we have? Good. We have a yen trade here giving us a golden alert with a near sensible with the climate being confirmed. So let's go for the yen futures. Japanese yen futures. Okay, and probably I have the wrong symbol. Yeah, I still have the H. So we're gonna have to change to the M. It's a long time I didn't open this workspace with the yen. I was thinking about it. It's like it's a long time we haven't done a yen trade here in the sessions. So at JYM20, I'm switching to the current symbol, the M, which is the right expiration date. Okay, and as everything is loading, so we are now confirming here with the bottom part of the screen. We are basically confirming everything I said before. Let me do this. So put my mouse in the right place first. So when I zoom in, you see everything you have to see. So first we have a thick dot. Okay, this is the dot number 1, and this is for an up climate. So we're looking at that figure. It's 5. Okay, so this is 1 out of 5. So we may be in a trade for 5 hours on the way up. Okay, and again, it's going to be more 4 hours than 5 because we already got one candle going on. But that's certainly valid. Okay, now in that sense we have an EMA around 95.8, and 95.8 beautiful falls within that UFO. So my friends, we do have a trade to be executed with the yen futures. So quickly I'm gonna turn on AutoUFOs to find my target, which is right there. So let me make a note of the target for the yen future. So the target for the yen future would be 92.26. Okay, 0.9226. This would be the target. Okay, so it's basically the top of the screen, which is okay. It's not bad. So let's go ahead and put the trade in place. Okay, the top of this UFO, which overlaps, which envelopes the EMA, is 97.5. So we're gonna have a buy order at 97.5. Okay, I'm using 2 contracts. Stop is gonna be below 91, so it's gonna be 90. Here we go. So my safety target is gonna be 05. We just got filled, by the way. And my final target is gonna be 92.26. 92.26. It's right here. Okay, here we go. So we have the trade. Okay, we just got filled on the trade. Entry right there. Stop below the green UFO. Safety target, equal distance. Okay, and finally, final target all the way at 92.26, which you probably remember it was a red UFO on the 60-minute time frame. I took it off so we don't see it, but it was there on the 60-minute time frame. Okay, so we got 1 tick in our favor here. Not a big deal. Okay, but what is a big deal though is that now that we got filled, I'm gonna zoom in the 8-minute time frame, because my friends, we now have the time stop methodology that begins counting. So we're gonna give the yen an opportunity to move in our favor and reach our safety target. We're gonna give this currency 3 times 8 minutes, 3 candles. And if we haven't reached the safety target in 3 candles, then we will be closing this trade, because if everything, which is the reason why we entered the trade, is true, we should reach the safety target. And if we don't reach the safety target in a limited amount of time, so then we're gonna be less confident, let's put it this way, that the rationale behind the methodology it's actually providing what we need. Okay, so in other words, let me phrase it differently. We have the climate in our favor. We have a UFO with unfilled orders to buy. And on top of that, we have an EMA that potentially may add more unfilled orders where there are unfilled orders to buy already in the market in a defined climate to the upside. In other words, if all of this is true, price has to move up. In other words, if price is not moving up quickly, so then it means that probably orders are being canceled. Probably the climate may be about to change. Probably the EMA is not injecting new orders. In other words, we are losing odds as time passes, and therefore we're going to cancel the trade. This is an optional trade management technique, but certainly it keeps you safe and also helps on working on your confidence. While we respect the market from a humble point of view, it's okay to be very confident that the methodology works very well, but at the same time, it's also good to be humble and respect that the fact is that the market could do anything anytime, and orders available in the market could be canceled, and we got to be respectful of that, and we don't need to either get upset or anything like that just because there were orders and they got canceled. Okay, not a big deal. Okay, it's part of trading. Okay, so we're just gonna let it happen, and if it happens, great, and if it doesn't happen, then we will act on it. Okay, very nice, good. Let me see. Basil, you're in. Very nice. Paul and Jose, having entered the euro on the range time frame, do we manage the trade on the edge time frame 50 minutes, 55 minutes? Yes, because the time stop methodology has to do with time, and the range time frames have nothing to do with time. Okay, so you would give yourself 3 candles on the edge time frame, which is time based, which is 55. Okay, yeah. So anyway, so we are in the yen trade long. We are in the euro trade. The euro trade is now making $6. Not a big deal. So we'll see what's going to happen. We also have a good point, Paul. The time stop working on this one. So I could go ahead now and switch to the 55-minute time frame. Okay, knowing that I have entered here. By the way, on TradingView, you also have many possibilities on how to set up. I'll do it from here. Set up your chart, okay, when it comes to trading, and you could show positions, show orders, okay, show executions. So if I show executions, this is showing me those. Let me zoom in because it's very small. Okay, it shows me those 2 red arrows that tell me, hey, you have entered in this candle. Okay, so this is now candle number 2. Okay, then if you have another candle and we haven't reached our safety target, then you could cancel this trade. Okay. So for now, we don't need to cancel anything yet, okay? But this is, what we got, okay? Cool, okay. Okay, new candle as well here. Little bit of a bad news here. The UFO went away, so it means that many of the unfilled orders have been taken away, okay? Probably the reason why the initial push to the upside took place, okay? But that's gone. Okay, so that's not a good news for the trade, but it doesn't matter. We're not going to change our plan because we still got the EMA and the climate in our favor. Okay, also, this is probably because of this UFO pushing the price down as price came here. Okay, but at the same time, as I said, not a big deal because we know in an up climate, sell unfilled orders tend to be canceled. So I will not be surprised to see a little bit of something like that, and then it goes and it keeps going. So this happens all the time. I'm sure the ones of you practicing the methodology, you've seen that before, isn't it? So we're just going to stick with the plan. And the plan is we do have a time stop in case nothing happens soon enough. But the fact that now the UFO is gone would be a reason to not to enter a new trade. But if you are already in, okay, we stick with the plan, okay? Okay. Cool. What else? So back to climates. Let's see what else do we have. On the futures markets, nothing else. Only the yen futures. Okay. Oh, look at that. Gold is now flashing. Let's take a look at gold. So looking at gold. Now, when looking at gold, first thing I want to do is I want to double check I'm using the right symbol. So I'm going to use bar charts. Wonderful, was you. Nice for your confirmation. I love this. obviously, in these sessions, I'm the one doing most of the talking, isn't it? But I always think and talk about teamwork, okay? And I mean it. This is not. Oh, I just click on the wrong icon, by the way. I click on briefing.com instead of bar charts. Both are a B. So that's where I wanted to go. Okay, so metals. Okay, and by the way, I didn't say today. I'm not sharing my camera today. Again, I am not in my normal location, so the broadband I have available is I'm not as confident as normally, and I don't want to create trouble for the session. Okay, so that's why I'm showing the chart and you got my voice, but today I am not showing myself because of that reason. And it's gonna be like that for a few more days. I would say maybe a few more weeks because of the lockdown, and that's the reason. Okay, so we'll all be patient with that. What's happening in the world is certainly more important than you guys seeing me, I guess. So anyway, M symbol is what we will see here on the top. The M symbol is confirmed with the great open interest and the great volume. Okay, so GCM is going to be the symbol for our potential trade with gold. So GCM20, switching to the right symbol. Okay. Switching to the right symbol. Any news about the yen? Not much happening. Still at break even. How many candles we've got? So candle number 1 was 16. Candle number 2 is going to conclude at 24. So 24 and 8 is going to be 32. Okay, for the ones of you in the trade at 12:32 New York time, this is what we need to cancel the trade if we haven't got to the safety target. Okay, so it's taking a little bit too much time in to my taste. Okay, but we're gonna do anything to change that. And at the same time, it doesn't matter because next thing you know, you have a push and now you get to your target. Okay, so we just let the trade play out. So climate for gold: 2 candles into a defined climate, which could be of 6 candles. EMA located at 94. Current price is more or less 94. So what do I need? I need a red UFO right there. We don't have it. I need a red UFO right here. We don't have it. I need a red UFO right here. We don't have it. So we need to use a bit of patience with gold because we do have the climate, but we don't have the right UFO yet. So what I'm going to do is look for where the targets should be. I just turn on the AutoUFOs on the 15-minute time frame. So I just want to look at where the targets would be. Pretty far away target. Okay, a bit too ideal. Okay, a bit too ideal. So probably this trade will end up with us trailing stop, which in this case is fine, is intraday, and the target will be 1656.8. Okay, so I'm making a note of that value. Okay, I guess you see it right there, isn't it? 1566.8. That's going to be my target, which is the top part of that green UFO. So I know my target, so I can now disable auto UFO, go back to normal. Here we go. And if a UFO forms before the end of the session, we still got 8 minutes to go. So then we'll take action with gold. For now, nothing to be done. So little bit of a movement in our direction. Not too exciting. Not only we don't have any UFO created on the edge time frame, also on the reactive time frames, no green UFO as of now. So this is not looking too good for now. But again, we don't change the plan. We just follow the rules. So again, 2 minutes from now, this candle will close, a new candle will begin. And the next candle will be our time stop candle, which is the one closing, as I said, at 12:32 Eastern time, which is going to be 11:32 Chicago time, which is where the yen futures trades. Okay. Climates. What else do we have? Nothing new on the majors. Well, we have an opportunity on the 60-minute time frame with the yen, but that happens to be the same as in the futures because the yen's spot Forex got the US dollar on the base, where the yen futures got the US dollar on the quote. In other words, when this one is red, the yen futures is blue. They go opposite, okay? And the fact that I got an alert here is also why I got an alert here. But certainly I can be more precise with the futures, and we plan the trade already, so I'm going to be good with that. So what else I'm gonna do? I'm gonna look at the minors, which we haven't checked today as of yet. I'm gonna sort these based on condition. Okay, here we go. And based on the sorting conditions, okay, so what do we have? We have multiple opportunities here with the Euro Swiss franc, Euro pound, um, pound yen, okay, pound yen. So we have a trade with the euro, we have a trade with the yen. So euro and yen are, you could go for it, but since I got them utilized, I want to avoid correlations. So since I got another opportunity here with the New Zealand dollar, Canadian dollar on the daily time frame, I'm gonna go for this one just to avoid correlations. That one is near sensible, it's confirmed climate. Okay, so I'm gonna go for that one. Nothing wrong with those, but then you may need to reduce the size and things like that. So I'm gonna keep it simple for ourselves. New Zealand dollar, Canadian dollar, so I have no repeated currencies. Okay, so NZD, and again we are going to be working on the daily 55. Let's see what we've got. Okay, so first looking at the climate. Okay, so the climate to the upside is 6. This is number 5. Okay, so we can still get a 1 day trade or 1 day and a half trade, something like that. Okay, so it's fine. Problem though, the average is 69, the EMA is 69, and we are already trading at 61, which is below. Okay, so we are below average, and therefore that's not a good beginning, especially because there is a UFO, but it's not overlapping, it's not enveloping the EMA, since the EMA is 69, with 69 is, let's call it here where the blue line is. Okay, and the UFO is clearly below. Okay, so there is no enveloping, so not a good idea from there. And with the 55 range time frame, what do we have? Okay, so we have 45, which is even lower. Okay, so not a proper setup. Okay, and therefore we will pass. I'll just go back to the euro US dollar just out of curiosity so we can track it. Yep, so it's still there doing its thing. Okay, going up and down as it defines itself. Yep, and nothing new. And then I want to take a look at the yen. The yen is now pushing. Okay, nice to see. Problem is that it's pushing with no UFOs being formed. Okay, so this creates a little bit of a problem when it comes to the consistency of the push. Okay, if UFOs were to be formed, we would understand it's more likely it will continue. If no UFOs are forming, then we understand it's less likely it will continue. Okay, but anyway, that's a good thing to see. Now we just got a UFO form on a reactive time frame, so that's a good news. So let me see. So as you can see, 11:32 Chicago, which is 12:32 New York, is when this candle will close. And if we haven't got to our safety target, then we're gonna have to close the trade manually. So we got 5 minutes for that. The session will conclude in 3 minutes, isn't it? But we have 2 extra minutes for that. So what I'll do is I'll extend the session by 2 to 5 minutes, just to make sure that we do this action together, since some of you are in the trade, and that will be better. Okay, can you use XAU USD? Yes, as long as your chart is giving you permission to do it. Yes, because XAU USD is a CFD, is a contract for difference that tracks the price of gold, so it should be very much equivalent to the futures contract. At the same time, Forex brokers and CFD brokers, they often add distortion to the pricing of those CFDs at times. So the chart may give you permission or may not. You may have had a UFO in the same place, you may not have had it. You may have the same type of climate and same stats, you may have a subtle difference. So as long as your chart is giving you permission, go for it. If it doesn't give you permission, then you don't. Okay? Okay, another UFO forming here on the yen. Okay, another UFO forming here on the yen. So this is a good thing, okay, because if it falls down, those UFOs are likely going to give it a kick again to the upside, and that increases the odds of reaching the safety target. But at the same time, we got the clock ticking against us, because less than 4 minutes from now, we're going to have to close the trade, okay? So I'm just gonna, I got, basically 3 4 minutes. I won't have time to plan a new trade. So I'm just gonna stick with this screen to basically end up with this trade with whatever happens. Okay. By the way, something that could happen, and it's part of trading, my friends, but you don't want it. I'm just gonna mention it so it doesn't affect your emotions when it happens, because it will. You may see now much more golden color kicking in. We are making 112.5. Earlier we were making like, I think 150. I think I saw at the moment. Uh, but next thing you know, you may have a dramatic change of climate, and market starts falling and reaches your stop at negative 187. This could happen, my friends. Okay, this could happen, and if it happens, for sure, it's not fun. But if it happens, that's what it is. Okay, and we have a stop in place in case that happens, and you should feel okay. It's part of the trade. It's part of the plan. So don't feel tempted to move your stop to break even, to do little tricks or add a little trickiness there, because you just open the door to break your discipline and future trades. You would miss some profits, and most importantly, you would certainly damage your mindset as a professional trader. Okay, so if you get priced for doing the wrong thing, you just fed the wrong set of beliefs. Is that making sense? So you don't want to do any of this, okay? And therefore, stick to the discipline, which in this case, the discipline means you sit on your hands. You do nothing. We got a minute and a half to go, something like that. And we're just going to wait a minute and a half. And from there, we'll see what's going to happen, okay? So we are 4 ticks away from that safety target. We could certainly reach that in a minute and a half. But if we don't, we will happily close the trade manually by clicking on the close button here, collect that profit. And it was not an amazing profit, but it was a job well done because you followed the rules of your methodology. Okay. Trading is not about being perfectionists. Trading is not about having the best methodology in the world. Trading is about finding balance between having an okay methodology that gives you some odds, plus having a perfect risk management. That has to be perfect. Plus having a perfect mindset. That has to be perfect, because if your mindset is not perfect, you will not execute the methodology perfectly. You will not execute the risk management perfectly. So the mindset has to be perfect. Your risk management rules have to be perfect, depending on what you're looking for when it comes to your risk exposure. Okay, and then the methodology is kind of like the least important. Of course, it's important too, but again, what's important is everything else I said. Okay, so just make sure we're gonna do that. We have now 30 seconds to go to see what's going to happen to this trade to the end. Okay. Yeah, and I'm reading your comment, Ahmad, when you said stay safe. Stay safe, everybody, my friends. Okay, the world is truly crazy, and it's proven to us that this is certainly something to be taken very, very seriously. Okay. By the way, new UFO just formed. Okay, and by the way, we are not reaching the target, so I'm just gonna close it. 1, 2, 3. So we are out of the trade. This trade collected for us around $150. So the trade is over. We ended up like 2, 3 ticks away from the safety target, but that's what it is. Okay, good news. Now you have a UFO. Okay, the EMA now is 97, and 97 is quite low in here. 97 is good here. Okay, 97 is here in the middle. So you can plan on a new trade. I will not do it since the session is concluded. Okay, but now you made $150. Okay, and now the market is kind enough to give you an opportunity for you to take another trade. Okay. Here we go. Sorry, guys, I'm just struggling a little bit here with the fact that I was zoomed in. Okay, so I'll fix that in a minute. But anyway, so you have this UFO here. Okay, you could plan a trade using that UFO. Okay, target will be the same as before. You will be lining up with that EMA. The climate is still fine. Okay, and in other words, you can just go for it. Okay. Good, everybody. As always, my pleasure to conduct this session for you guys. As you all know, I love this. I love the teamwork. I love the markets. I love the trading. I love spending time with you guys. And I love to see as well the hard work that some of you are really, really putting in place. This is the way to go. Okay. And I love your comments in the chat box and you working with me. And certainly if you are new to the sessions and you haven't had the opportunity yet to put some time and effort in place, you'll do it. No worries. Okay, everybody at your own pace. But certainly, I'm very happy. I'm very proud to see when you guys are doing that, because this is how you grow. This is how I do it, how I did it. This is how everybody does it. There is no magic formula. You have to develop yourself, and this implies some time and effort. Okay, so good job. Looking forward to see you on Thursday for the option session. And in the meantime, stay safe, keep up with the good work, and see you then. Bye bye, everybody. Take care.